so good to see everyone again. Thank you so much for inviting me back. The last time I was speaking with you folks, we were talking about the Calpers situation. I am going to get to the Calpers situation. I wanted to talk about first long-term care in general, long-term care insurance, because I think that the more you understand your policy, whether it's Calpers or any other policy, the better you will be able to make a determination as to what to do about this Calpers situation. At the end, or towards the end, I'm going to give you an update on the Calpers program and what's going on and what the options are. I'm also going to give my guidance on what I would do if I were in different categories, such as what is my age, what is my health, and how should I deal with this situation with Calpers. So I will answer those questions. The other thing is I just put a little little note in the chat. I do not know how this is going to end up with the settlement. Nobody knows that right now. And so I want to avoid speculation on what if this, what if that. I don't know. Nobody knows. But what I do know is that I can guide you on if you should keep your policy depending on your age, your health, etc. So those are the types of things we're going to talk about. And as Suzanne said, I am a patient advocate, but I've been in the long-term care industry for 35 years. This is pretty much all I've done since I've graduated from college. So my husband and I did build our insurance practice. So we have seen every long-term care insurance policy that's been available to people. And I understand it quite extensively. I think one of the problems with long-term care insurance is that people buy it, such as myself. I've had a policy for over 20 years. And you put it in a file, and this is one of those policies that people rarely pull out and take a look at because they really don't want to think about it. Don't blame them, but also it's just not something that people normally understand. And so I always tell folks it's a good idea, just on the basis of language, terminology, how does this work? It's a good idea to have a refresher. So that's what this is going to be, a little bit of a refresher. Most of you are going to have what's called a traditional long-term care insurance policy, and it kind of looks like a piggy bank. The piggy bank concept, this is how these policies were designed. You put in a little bit of premium or a lot of premium every single year, every quarter, every month, whatnot. And in the event that you need services, it's going to pay out in a certain fashion. Most policies are comprehensive policies, and I'll get to that in a moment. But in a nutshell, your piggy bank probably has been growing, so that if at any time you actually need care in your home or in a facility or something like that, you punch the piggy bank and you start pulling your money out. And everybody has different types of policies in terms of where they're going to pay. I'm going to get into that in a moment. But the most important thing is to understand you pay your premium. Once you pay your premium, you have access to all of this money and all of these services, which means that if something's going on with you, you should really think about, wow, I have this little piggy bank, I have this little savings account. I wonder if I should be accessing these benefits. A lot of people think that they're going to save their piggy bank or their savings account until they're flat in bed. And honestly, I have run into situations where people have not filed a claim because even though they're maybe wheelchair bound or in an assisted living facility, they thought they might have to be on hospice or something. And so I really want people to understand that these policies were designed to help people age in place safely. It's not supposed to be for after the fact when you have that traumatic situation and now, shoot, I think I have an insurance, but I don't have any idea how to use it. These policies should be used as a helping folks stay in their home and age in their home safely. And that's what I'm going to be speaking about a little bit today. In general, policies will pay out of this savings account or this piggy bank home care at home, in an assisted living, or in skilled nursing. And as you pull money out of this savings account, it value goes down, 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 down. Okay, this is how most policies are. Some policies also have inflation, and I'll talk about that in a little bit, but I'm going to go on to the next slide because I just want you to understand that your policy, that's all these papers, you know, stapled together, is really a little savings account, a little piggy bank that you have money in that probably has been growing quite a bit. Now, here are the words or the terminology. This is just part of the terminology that causes the premium to be high, low, or somewhere in between when you bought your policy. And guarantee you, when you bought your policy, depending on how long ago that was, you probably don't really remember why you did what you did. I can tell you that most people I talk to, and even years ago when I first started selling long-term care insurance, people bought the policy, oh, in case I need it, it'd be nice to have. People do not buy long-term care insurance in general thinking, I'm actually going to use this. And so because I think I'm going to use it, I'm going to get a very good benefit. So most people purchase benefits thinking that they're not going to use it. When I say that, it's important because a lot of times what you think you have, you may not have. In particular, if you've had a rate increase, you may have made changes along the way. Sometimes when I meet with people, they think, oh, I remember I bought that policy and I think it was a lifetime policy, but 5 or 10 years ago, they actually changed it because they had a rate increase and they didn't save those papers and they don't remember. So you should always pull out your policy and have somebody do a policy review on your policy particularly, but in general, your policy has a daily amount that it's going to pay you or a monthly amount. And I'm just going to make up a sample. For example, most people that I see these days have about $200 a day that they can collect to pay for their care. Most people. In general, most policies will pay per day. So if you have care each day, your policy will pay up to a certain dollar amount per day. So for example, let's say I have a $200 benefit in my home and my bill is only $150. The insurance policy is going to pay you what your bill is, $150. You're not going to have access in general to the full daily amount, unless it's a very special policy that we can talk about at some time. The other thing is your policy might pay monthly benefit, which is really nice. A monthly benefit means this. The insurance company is going to look at all of your invoices every day. Some days are going to have more charges, some days are going to have less. So for example, when an individual comes home from rehabbing for hip or whatnot, they're going to have a higher expense each day. But as they recover, their expenses are going to be lower. But what the insurance company will do is they'll say, well, you know what? We will pay you up to $6,000 a month. So let's just add all your invoices and they will pay based on that. And that's a super flexible, wonderful policy. It's important to know which one yours is. The other thing is, do you have a comprehensive policy or do you have a single setting policy? And this seems like a really silly thing, but it's important. Comprehensive policies act like that piggy bank where they lump everything together. Single setting policies, these are older policies. I don't see them that often, but they are out there. And what the insurance company does is they break out in sections. We will pay X amount if you're in your home and we'll pay for X time. We will pay X amount if you're in a facility and we will pay for X time. So single setting policies have to be used in a different way. Comprehensive policies mean that you can kind of move along the care continuum. You can go back and forth between a community and go home, for example, like in a rehab situation, and then you go home and the policy is fine with that because you're just moving along the care continuum. So it's important to know if you have a comprehensive or a single setting. The other thing is sometimes people think that they have home care on their policy and they really don't. So it's very important that you look at your policy and look at it and make sure on the schedule page, which is usually page 2 or 3, it's at the very front of your policy, what your policy will pay for. Some people said, I don't want home care. If I'm really sick or I need help, I'm just going to go into a facility. And then time goes on and they realize that maybe they shouldn't have purchased a policy like that, but they don't know the difference because they haven't looked at their plan. The other thing is policy limit. So again, this is how long that policy will pay. And this issue is something that people get very conflated. And it's so important you understand this. And here's why. So let's say I have a client who has Parkinson's disease and their spouse is doing much of the caregiving and they're helping their spouse, but the spouse really does need more help. But they think they have a 3-year policy. And actually, probably they have a piggy bank policy. And what that means is we can start pulling money out of that piggy bank, but that doesn't mean the clock starts and that now you only have 3 years in which to use your benefit. What we do is we help people sort of mete out their policy benefits. It's kind of like a spigot. You turn it on full, or you turn it on a little, and you just pull out what you need. But there's a benefit to starting a claim as soon as you can, and even getting a little bit of care and taking a little bit of money out of the policy. And there's a reason why that's important. I'm going to talk about it a little bit later, but here's just a little snapshot as to why. And the reason I'm sharing this is because oftentimes when I give this presentation, there's people in this situation and they think, gosh, I'm that person. I should be doing X, Y, and Z. So for example, let's say that you don't think you should file a claim because you only have 2 years or 3-year policy, but you're struggling as a caregiver or whatnot. Once you open a claim and the benefits are approved and you start getting money, in general, the premium stops. That's a wonderful benefit. If you have a waiver of premium at home, that means that your premium will stop. The second thing is, and most important, is that now you have a care plan put in place. You have a foundation of care services put in place so that let's say something happens and you're now in a crisis situation. Well, you already have your claim open. You have your care providers put in place, and you can very easily flex into a higher level of care, get more services, instead of starting from scratch and filing a claim in a crisis, which is what most people do because they don't realize that their policy should be looked at as a plan that helps them age in place safely. The other thing is the deductible. And this is another reason why, if you're eligible for benefits, you should file a claim. Most people have a deductible period, which is measured in days. Sometimes it's called service days, sometimes it's called calendar days. Well, let's say you have service day, which is very common, and you have 90 service days. So let's say you only want to have 3 days of service a week, which is very common. 3 or 4 days a week is very typical for our clients. Well, if you're only getting 4 days of care a week, then that would be 16 days a month. Do you know how long it's going to take for you to get your 90 days met? It's going to take a while. So it's very important for you to know, how is your deductible measured? Is it in days? Sometimes people have what's called calendar day deductibles, which is fabulous. That means that you don't have to worry about how many days you have of care. It's just calendar. And Calpers works like this. This is one of the nice things about Calpers. Calpers starts at a certain date and they count 90 days forward. You don't have to have care every single day. And then the other thing is, some people who have policies like John Hancock or Genworth or even MetLife, they have these wonderful riders that they X out the waiting period for home care because they want people to get the services where it's the least expensive. They will reward you for that and not make you wait for that 90-day deductible. So you have to understand how to meet that deductible and what that is in your policy. If it's the worst case scenario, if it's the best case scenario, and start your services based on that. The other thing is an inflation rider. A lot of these policies have inflation riders, and that means your policy probably has been growing over time. A lot of times we'll get schedule of benefits from our clients and they'll say, I think I have $150 a day. And I'll look at it and I'll say, well, actually, did you know your benefits have been growing for the last 25 years? And now they have $400 a day. That's an important difference to know. So what kind of an inflation rider do you have? And then again, the last thing is the waiver of premium. And I talked about that just briefly. Most policies have waivers of premium. They all work them differently. But at the end of the day, it means you've got one less bill to pay, which is nice, especially if you're needing services or care. Now, terminology, let's see if, let's go back. Okay, now this one, this is probably the most important part of these policies. Yes, the benefits are important, but this right here is kind of what gets the whole thing kicked off. What has to happen and be quote unquote wrong with you in order for the insurance company to recognize that you actually are eligible to file a claim with this policy? Most of the policies that have been sold are about the same. In other words, they mostly have the same language. And so it isn't often that I see something that's crazy and super horrible and very difficult to qualify someone for care. In general, what I'm going to share with you is what most people have. And if you have Calpers, this is what you have. So the first thing is the terminology. Again, where's this thing going to pay for? Will it pay for you in your home? You need to know that. Some Calpers policies, people didn't add that home care on for some reason. Some Calpers policies only have facility, which means skilled nursing or assisted living or memory care, those three things. In general, however, most people have all levels of care. And so what that means is home and community care, which incorporates home care. You have to use, in general, a home care agency. A lot of people who bought policies in California allow them to have informal independent caregivers that do not work through agencies. That's a separate topic we can talk about later. But in general, you do have to hire an agency that's licensed in California. Again, there are policies that don't require that. Calpers does require that. They will allow you to hire an independent caregiver, but let me tell you, the hoops you got to jump through to do that, not worth it. So it's in general, you got to work through an agency. The policy also recognizes adult daycare. That's part of the community benefit. In addition, community care sometimes in these contracts means assisted living or memory care. And then of course, there's the skilled nursing facility. Now, one of the reasons why people, I think, don't understand when it's a good time or when they should file a claim is because they think that their policy really is meant to be paid for in a nursing home, and they want to save their benefits until that day comes. And I'm going to tell you that that day probably may never come. If you do go into a skilled nursing facility, it will be for rehab and it will be short. A lot of people have such a misunderstanding about the nursing home, especially if you have not had experience or a family member that has had long-term care services. Skilled nursing, you going to a skilled nursing facility is so rare. In the 35 years that I've been working in this industry, I can count on maybe 3 hands how many of my clients have gone into a nursing home and not come out back home. Because of assisted living facilities, because of the services that are available in the community now, that type of a very high level acuity is not needed unless, of course, a person is on a ventilator or if they're on a feeding tube or something very serious like that. In fact, even hospice, you can be managed in a hospice situation in an assisted living facility where you don't have to go to a nursing home. And why is this so important? Because nursing facilities is like a high acuity, a very medical model, and certainly some people need that. But assisted living facilities, boarding care facilities, and memory care facilities oftentimes are a better setting for people who need chronic attention and care, chronic care attention. The other thing is the definitions of what has to be wrong with you in order to get your money. It's called chronically ill. Most of these policies have a definition that says, hey, when you're chronically ill, you can file a claim. Well, what does chronically ill mean? I mean, some days I feel like I'm chronically ill, right? But there are, it's kind of like a box that you have to fit in order to be considered benefit eligible. So I'll give you an example. There's two paths you can go down to be chronically ill in general. The first path is called functionality, functionally disabled. So if a person has functional problems, that would mean that maybe they need somebody to help them get in and out of a chair. Maybe somebody has a lift chair because their knees are so bad, or their hips, or they're in so much pain that they have to have help to get up out of a chair. So they need help to transfer. Sometimes because of mobility and functional problems, they also need help to get in and out of the shower. The shower, the bathroom, walking outside to get the mail, these types of areas are super dangerous for people who have functional problems, mobility issues. And so if perchance a person needs assistance, even somebody to stand by to make sure that they are okay, even just to sit in a chair outside the shower door to make sure that they're grabbing the grab bars, they're stepping up over the shower lip, and they're getting in and holding on, that means that that person needs standby assistance for showering. They're functionally disabled. While most of the time when I meet people, they say, no, I'm not, I can do that myself. And I explain to them, actually, that's not true. Because if at any time you feel unsafe, or you are unsafe, or you've had an experience where you have fallen, or you've gotten stuck in a situation where you can't navigate your way out, you are functionally not able to do the thing. And the things are what we take for granted every single day. Showering, getting in and out of the shower, dressing, putting on TED hose is a hugely difficult thing for people to do that have edema, or that have hip problems or spinal stenosis, to bend over and pull things on. So showering, dressing, getting in and out of the bathroom, okay? Sometimes people's in their bathrooms, their toilets are very low, and so they have a hard time standing up, and so they're grabbing onto the towel rack, which is not a good idea, but or the sink, and incontinence. So incontinence is one of those things that people just literally refuse to talk about, because it's so personal, and for some reason people feel a lot of shame about that. I don't know why. I've had 4 children. Need I say more for the ladies that are listening to this? It's something that is very natural and normal and happens especially for older folks that are on lots of medications like Lasix. It's very hard to keep that under control. Why is continence important? It's important because incontinence leads to urinary tract infections, hygiene issues, and also it can really damage kidneys. And so it's important for us to know, is somebody really seriously incontinent of bladder and or bowel? So if a person has that problem and they need help in that area, that means that they're functionally disabled and they have incontinence. The other thing would be ambulation. So ambulation is an interesting thing. A lot of insurance companies don't recognize if a person is not ambulating. They say, oh, that's not a big deal. What else do you have? And in my world, that's a huge deal, because if you can't ambulate safely, and when I say ambulate, I mean if your family's around and everybody's visiting and you decide you're going to go out and get the mail and everybody holds their breath, or they just look at each other and say, do you want to say, do you want to say? I don't want to say, but please go with them to go get the mail. That's so common. And unfortunately, people don't realize how frequently the broken hips, these types of things happen because somebody is not mobile and they're not properly using things that they need, like a cane or a walker, or they're furniture surfing, or they're walking along their car. And so if a person is doing that type of thing and they're taking a lot of risks in that way, we would say that they're functionally disabled. And so we would look at all of that whole range of things, and we would help an individual just look at their life situation and say, how many of those would a wise person be able to not do for themselves? And when I say would a wise person, it doesn't mean that people are not smart. It means people that are not taking risks with their safety. And so if a person is unable to do just two of those things, just two, that means that they're considered chronically ill. So that's one path, functionality. Now, you notice that I didn't say housekeeping, driving, medication management. You notice I did not say that. The path for functionality is all about physicalness, which is why it's hard for people to really recognize that need for themselves, because it's personal. They don't necessarily want someone to get into their space. If I said, I need somebody to help me do my laundry, I need somebody to help me prepare meals, that's much safer than saying, I feel scared every time I get in and out of the shower. Now, the next path that the insurance company would consider a claim on is cognitive impairment. And you see, I put this right here. Now, cognitive impairment is a whole Pandora's box, but I'm just going to tell you in general, insurance companies, and we'll talk about this a little bit more with regard to claims, but insurance companies assume that most people have mild cognitive impairments. What they want to see is that it's severe. Well, what does severe mean? Severe means that an individual needs continual supervision for their safety. And there's lots of things about that issue that we can talk about a little bit later, but in general, a person has to be diagnosed with a cognitive impairment and on some type of medication or therapeutic to be considered eligible to file a claim for cognitive impairment. So those are the two paths. Those are the languages, those are the words that you're going to see in your policy. Either functionality or cognitive impairment. The other word that you're going to see is a care advisor. Now, care advisor is basically the insurance company saying, we're going to help you figure out if you're able to get money from us, which is fine. It sounds very nice and it's okay, but the process to actually file a claim means that the insurance company is actually the one who's advising you and looking at you, because they will hire a nurse. The nurse does not work for the insurance company. It's a third-party administrator. They send them and they evaluate the client to see if they're quote unquote eligible for benefits. So you can see where perhaps when you look at that language and you say, oh, my policy includes a care advisor. Wow, I have somebody that I can call the insurance company and they're going to tell me how to use my policy. That's not quite what that is. And I'll get to that a little bit later, but you're going to see that language. Do not misunderstand that to think that the insurance company is going to pay for you to hire your own case manager. Some companies do pay that benefit. There's not a lot of companies that do that. Some do, but all long-term care policies have a care advisor who is with the insurance company, who is designed to be dispatched to you to figure out if you're eligible for benefits. That's very different than someone who is for you working as a case manager who has nothing to do with the insurance company. The last thing that you'll notice is a plan of care. So all of these companies will write your plan of care. And this is the type of thing that as a broker, just being very transparent with you, when I was selling long-term care insurance, and I still do sell long-term care insurance, I had no idea what this plan of care was going to be. I was under the impression, until I started filing claims for people, that if my client's doctor said that they need care, that that was the end of the story, period on the end of the sentence, and we're done. And that is absolutely not true. The insurance company is going to write your plan of care based on what they think you need. And so this is why it's very important and why we explain to people that you have to be super transparent in what's going on with you when you file a claim, and cannot be fudging and making yourself look better than what you are. Because if you do that, your plan of care is going to be very, very small, meaning the insurance company is going to say, yep, we'll pay for your care, but you can only have 4 hours of care a day. And this happens all the time. And so the plan of care is written by the insurance company. They'll approve your claim. And then based on what proof you've given them, they're going to write up. Calpers does this all the time. They generally only approve people for 4 hours a day of care if that individual only needs assistance with bathing and dressing. They'll do 4 hours. So you can see what the problem with that would be. Well, let's say that on one day, the caregiver is going to be driving the person to the doctor. That takes 6 hours minimum. And so we generally try and work with the insurance company, whether it's Calpers or another company, and help them understand, well, actually, here's what this person needs, and make sure that that plan of care is not small. Okay, so those are the terminologies. All right. I am going to look and see if there's anybody making questions, and I don't see any right now, unless I can't see them. As I'm speaking, I'm not sure if that's disabled while I'm talking. You're free to send to me questions, because you probably are thinking of things as I'm talking about this, and I want to make sure that I get to your questions. I'll keep this little box open just to see if I see anything. Now I'm going to talk about the role of a claims advocate. So as Suzanne said, I am a patient advocate, and I started doing advocacy in 2013. And I started doing advocacy because of my clients having a tremendous trouble finding good care providers, not having any idea where to find care providers, and then having to understand the terminology and all of the requirements of their insurance policy. And so we developed a process in 2013 where we stand in the shoes of our clients. We do all of the work for them, and we present them to the insurance company as they truly are, so that we make sure that our client is not minimizing what's going on or not able to communicate, because sometimes even people that have mild cognitive impairment have very poor judgment, and they're not communicating what's proper. And so they may call the insurance company and share information, and the insurance company might say, you know what, maybe in 6 months you should file a claim, but right now it just doesn't sound like you're eligible. And I hear that all the time. And I just, I saw that a lot. And so I became a patient advocate. What I tell people, and I'll tell you this with your Calpers, you prepared years ago when you bought your policy. And I just want to say, I mean, well done, because honestly, even just a small amount of benefit from these policies is a game changer for families when something happens that they really didn't anticipate. And so you've prepared, you bought this policy, you've been through a heck of a lot with these companies, whether it's Calpers or even another. You've probably had rate increases. And so that's frustrating. And you probably feel like breaking up with this insurance company because of that. But I just want to tell you, I have long-term care insurance. My premium has gone up. It went up 95% last year. So I know how you're feeling, but you still made a good decision. But you need to know how to use your policy. There's rules. It's like any contract. You have to understand the rules. And if you're like most consumers, for example, even me with my car insurance or whatever, I don't know anything about my car insurance. I don't know anything about my homeowners or my fire or whatever. I don't care. I just pay the bill. I know people think the same way about their long-term care insurance, but this type of a policy, you really need to have some understanding, or somebody who's going to help you to have some understanding about what are their rules? What do we need to meet? How do we need to do this? And then the other thing, and the last thing I want to say, and I tell this to my clients all the time, and I believe this more now than ever, you have to have someone help you. Even for those of you who have and are very professional people and have done tremendous things over your entire life, this is not a time to not be vulnerable. You have to actually be a little vulnerable and let people into your space to help you, because without your cooperation, in the event that you need to file a claim, things do not go well. And so it's important that you receive help in many different ways. And so as an advocate, that's the first thing that we do, is just try and help people feel safe about letting us into their space so we can help them properly. Okay, so now what we do as a claims advocate, what we've been doing a lot for people who have their Calpers policies, is we've just been looking at their benefits, calming them down a little bit, trying to help them understand what they have, how it compares to what's available today, and how they can use it. But sometimes after these talks, I will have a family call me and they'll tell me about a very difficult situation they've been going through. And I'll say, why have you not filed a claim? And they'll say, I called, I made a phone call, and I was overwhelmed, and I just, I did nothing with the paperwork. And that's very common. So in general, this is what we do to put the steps together when an individual we think is a proper claim. And when I say is a proper claim, when we meet people or we see individuals, we want to make sure that they're going to have a successful outcome. So we don't file claims for folks that are frivolous, because we don't want to put people through that. So what we do is we do an intake interview, and we ask the questions just like I'm talking to you folks about their life, how they do things. And I've been doing this long enough that I can kind of pick up on things with people when I know that their life is pretty difficult, but they're just hanging in there and they're doing a great job of making things work, but it's not going well. So I do an interview. The second step is I'm going to call the insurance company for our clients. So as their advocate, I'm going to get on the phone with the insurance company because I know what they're going to ask me. They're going to start asking me questions like, can your client bathe? And I'm just going to say no. And then they will say, well, can they bathe 50% of the time? Can they do it if they stand by a sink? Can they do it if they have someone helping them with a sponge bath? So how would you answer those questions? And what happens is that people are like, well, shoot, maybe I can do it. Well, sometimes if I'm having a bad morning, I won't. And then they'll say, oh no, yeah, I can do that. And so what I do is I just say, no, they cannot do that. Let's just get through these questions and get a nurse out to the house so that somebody can see this person with their eyeballs and see what's going on with them. So we handle that for our clients. The next thing that we do is we collect documentation. And the reason we do that is because the analyst may or may not get medical records, and we want the analyst to see this person from a medical and clinical perspective, not just what they think based on the phone call. And a lot of times it's hard for clients to collect documentation from their care providers. So we'll get on their MyChart, we'll download documentation, test results, etc. And what we're doing in this process is we're painting a picture for the insurance company so that there's no question that this claim is viable and that this insurance company is going to pay for benefits. We also handle all of our clients' invoices. So for example, if you use Visiting Angels, home care agency, Visiting Angels would send us all of the stuff every week. We see it, we make sure it's proper, and then we send it on to the insurance company. So we do all that, and then we make sure that the benefits are going into the bank account. And then what happens? Everything goes well, the claim is approved, and 4 months later, guess what? They want to do it again. And so we have to do a recertification of the process. It's not as intense, but a lot of times it means that we have to do another assessment or we have to do another intake interview. And so That process goes on every 6 months. And that's why we follow people for a year at a time. And so what we do is when an individual needs this help, they retain our services for 12 months. For individuals that need hospice care, we will do a modified contract, but we want to follow people for a year at a time because we know the company's going to do a recertification. In addition, the person's care may change. They may come from a facility and come back home, and we're going to have to file a different claim. All right, now, the next thing, and we're almost to the CalPERS part of this little presentation here. I wanted to talk to you a little bit about common problems with claims, and I'm not going to spend a lot of time on this because I think what I've shared up to this point helps you understand that this is a little bit more of a complicated process. One of the things that I think is a huge misunderstanding for people is because you're on Medicare, a lot of you are on Medicare, or you have really good health insurance. When you go to the doctor, I want you to think about the last time you actually filed any kind of an insurance claim. You probably didn't. You go to the doctor's office, you present a card, and they have wizards in their back office that are doing something that you know nothing about. They're sending it to the insurance company, they're getting their coding, they're doing all that stuff, and you have no involvement in that. Long-term care insurance, folks, that is not the way it works, and here's why. That long-term care insurance policy is going to pay you directly because you get to hire your own care. This is not a PPO, this is not an HMO, this is your contract, and the insurance company is saying, well, who do you want to provide care for you? Where do you want to be cared for? And you're like, oh gosh, I don't know. I have to pick that? Yes, you do. And because you get to pick your services, that's an amazing amount of freedom, but it's also can be a big burden for people if they don't know where to get resources. And so because the insurance pays you directly, it is your responsibility to make sure that the insurance company gets what they need. Okay, so mild cognitive impairment, for any of you who are listening to this who are dealing with an individual, whether it's a spouse or a parent that is experiencing cognitive impairment, this is a little bit of a difficult thing, as you imagine, because there's a long process that people go through to determine what the heck's going on with them. I'll just give you a very quick example. My mom had a double knee replacement last Monday, and she's 79. She has already mild cognitive impairment that gets worse if she doesn't sleep well or if she's in a lot of pain. Some days are good, some days aren't so good. And she's starting to slow down on the things that she's been doing that requires a lot of mental energy, right? So we knew going into the surgery that the anesthesia probably was going to cause a problem. And you're probably thinking, why in the world would she have two at the same time? There's a reason for that. My understanding now is once a person has one, they usually don't go back for the second. And so doctors want to do two at the same time and get it over with. But let me tell you, this has just been brutal. And my poor mom has gone from very functional to barely measuring anything on her little slums MOCA scores. And it's very scary for us as a family because you think, is this going to be this way now? Is this going to get better? My mom today would qualify with a severe cognitive impairment because her score was so low. My mom next month is not going to qualify with a severe cognitive impairment because she's going to get better. Once this anesthesia is fully out of her system and she's not on a lot of pain meds, she's going to be back to her baseline. But this is why it's difficult for people and insurance companies. They want to know, how long has this been going on? What types of behaviors are you having? Do you have a diagnosis? And so when we file claims for people that have dementia, we're very careful in the documentation that we get so that there aren't any surprises. Then the other thing is, as you can imagine, I've talked about this a little bit, the other problem with claims is people just don't recognize they're in trouble. I don't recognize when I'm in trouble. I find that I do things that I probably shouldn't be doing, and I'm 57 years old. It's just kind of that way we accommodate our losses and our weaknesses because we're, strong people. The problem with that is with this type of a claim, trying to explain to people, you cannot present yourself in a way that you usually do when you go to the doctor. You have to present yourself in a way that you're like a helpless Hattie or, needy Nanette, because if you do not, you're not going to get your claim approved. You have to be very gut honest about what's going on with you. And then after the assessment is over, you can think about yourself any way you want, but going through the claims process, denial and explaining things away is probably the biggest reason why claims are denied. The insurance company is not going to say to you, you know what, are you sure? That just doesn't sound right, because based on your health history, you should actually be, okay, well, if you say so, okay, well, and that's it. That's the end of it. And then the individual goes on and has a traumatic fall, and now we've got a terrible crisis. So cognitive impairments are problematic, and people just not being aware of their own functional status, which is why we get medical records, because we want to see what's in their physical therapy records, etc. And then the last thing that's difficult for people is paperwork. Paperwork is just a problem in general for people, especially now, folks. It's not even paperwork, it's technology. So this is the way this goes. You call an insurance company and they say, jump on our website. I mean, don't you hate it? Your electricity is out. I live in Ramona, so our electricity is out. I call, SDG&E, and they're like, get on our website. It's like, well, I don't have electricity. I can't do that right now. This is the same way it is for individuals who are filing claims now. It's a high-tech touch. And so they want you to set up your own web page. They want you to, or your landing page with the company. They want you to scan and fax and all this kind of stuff. And for individuals that are in their 80s and 90s, that is just not their language. It's just not something that's easy for them. And so because of that, there's missed opportunity, and benefits don't get paid, and claims just sit and stagnate or close. All right, CalPERS. Now, oh my goodness. Okay, so if you were on the conversation that I had about CalPERS just a bit ago before the holidays, I said they are not going to find a replacement policy, I can guarantee you. And they didn't. I'm not going to make a comment on that. It's super unfortunate because I think it's wasted time. I think I just made a comment on that, but anyway, you have two options now. The first option is you surrender your CalPERS policy in exchange for the refund that they told you they would pay you. It's on your paperwork. You should have gotten this letter sometime around the 21st of December, and it'll give you an amount of money that if you would like to surrender your CalPERS policy, they will pay you. Option one. Option two is gone. So now you've got option three, and that is request an exclusion from the settlement and retain your policy. Whatever you want to do, you have to respond by the 28th of January. You have to make a decision, one or the other. So what the heck do you do? I said last time, and I mean this, that you can't make a decision based on articles, web blogs, things that you're reading about how annoying and irresponsible these people have been. Don't make a decision on that based on that. You have to make a decision based on your personal situation and what will happen if you cash that thing in. So remember, if you are going to select a refund option, you have to have a strategy to pay for care. What I've heard from people, and it's totally human nature, but what I've heard from people is, I don't want this anyway. I didn't want it anyway. I'm just going to get my $50,000 back, and I'm going to put it in the bank, and I'm going to invest. And what I ask them is, oh, so the long-term care problem has gone away now. That's not potentially in your future. And the answer is, well, yeah, it might be. So that's my point. It's still a problem. It's still expensive to pay for your own care. And so that money that you're going to get back, investing that amount of money at this time is not going to go far. In particular, you'd have to invest it for years and years and years and years and years in order to get any kind of benefit from that. The only way to do it would be to put it into another insurance policy, which is why they were looking for that option for you. So if you're going to select the refund, just make sure that you have another option. Maybe it's another property, maybe it's more income that you have from a different investment or whatnot. Understand how much the cost of care is today. Do not minimize that situation. Just make sure you make the right decision based on the cost of care and how you're going to pay for care, because that situation has not changed. Number two, if you select a refund option, can you purchase another long-term care policy? And again, this is a hard question because the answer is probably going to be no, you cannot. We're going to look at that in the next slide, but I want to be honest with people and help them understand the odds of you getting another policy is slim to none. Or if you can get another policy, you're going to see the price in the next slide, and you're going to understand why, based on what you're paying with your Calpers, you're still probably better off with that. The last thing is, if you select a refund option, you have to consider not just what I said at the first, like what is the future cost of care, but you have to look at your age, your health, and a potential claim event, which is why I put this Calpers thing at the end of the presentation, because I wanted to help you understand what long-term care insurance is, what it does, why it's important, why it's a wonderful planning tool, and possibly should you be filing a claim, or should your parents or your spouse be filing a claim? And if so, absolutely do not turn that policy in. So here's what I mean by premiums. Remember I said that last year I got a 95% rate increase? Okay. So I've had my policy, I bought it when I was 35, I think 35, 37. And my premium was $100 a month. And I thought that was a sweet deal. That's nothing. And 95% rate increase is a lot. And now, and I'm doubling my premium, and my husband's also went up 95%. So our long-term care expense doubled. And what I want to say to that is, I'm not surprised this has happened. You all know why this has happened, because these policies were underpriced. When I paid $100 a month for my policy, I thought I am just basically robbing the bank here, because this policy is a very good policy. There's no way in the world this is enough premium to pay for my care the rest of my life, but I'll buy, I'm in. And so that's kind of the way this has been working, unfortunately. It was policies are very underpriced. So, okay, fine, we all get that. Well, what about now? What about if I want to just unload that policy because I'm annoyed about that? What can I get? So if you are looking at traditional, I'm not talking about hybrid policies right now, because a hybrid policy is different. A hybrid policy is the type of policy that you put a lump sum of money in, and it's a life insurance policy. And if you never need long-term care, then your beneficiaries are going to get a death benefit. And so people love those, and they can be very good options for folks. I'm talking about traditional long-term care insurance, just like your Calpers that you're paying every year on. And if you never need long-term care and you go in your sleep, the insurance companies are getting all of your premium, and like, who cares anyway? Who wants to be on claim? Who wants to be on long-term care? But that's traditional long-term care. So today, the average person, this is what they're buying. They're buying $5,000 a month in a benefit. So if I need care, my policy is going to pay $5,000 a month. Well, how much is care these days? It's about $5,000 a month. That's average for home care. And that's about 5 hours a day. Okay, so this type of a policy that people buy today is just scratching the surface at the price. I would venture to say that most of you people have more than $5,000 a month in a benefit, probably. But anyway, and you want to buy a policy that's going to pay $200,000, which is about 3 years, quote unquote, with an inflation rider. So these prices are 55, 60, 65, 70, 75. So check this out. You've got the male, they're cheaper than the female. Same age, males are cheaper than female. 60, here's the prices. 65, $2,400 a year for a male, $4,000 for a female. Now, most of the people that I talk to with Calpers are between 65 and 75. And most of them are females. And if you offloaded your Calpers to buy something new, you would be paying anywhere from $4,000 to $7,500 a year in a premium for less coverage. How do you decide? What should you do? You should base your decision on your age and your health. If you're between 70 to 80 and up, you should strongly consider, I spelled that wrong, excluding yourself and keep your Calpers. If you're between 70 to 80, you should not unload your Calpers. That is my opinion. If you are any age, even if you're 55 and you just bought the darn thing, but you have significant health issues, and when you got your policy, you said, I'm so glad I got that. Or if you have a family history of dementia, you should exclude and you should keep your Calpers. If you're between 50 to 70 years of age, you should consider surrendering your Calpers only if you're in excellent health. And I mean excellent. You've just recently had blood panels. You have no structural functional problems with your knees, your hips. You have no medication, not a lot of medication. And look, that's nearly impossible for people in this age bracket. So I'm excluding probably a lot of people, but if you're between 50 to 70 and you're in excellent health, you should consider taking your payout and buying a hybrid policy. You can put that money into a hybrid policy and you'll have some long-term care insurance. You're not going to have a ton of long-term care insurance, but you'll be able to reposition that deposit into a long-term care, quote unquote, hybrid, and you'll have some long-term care coverage and you'll be able to put that deposit to work. You need to make a decision by January 28th. And here's the problem. If you apply for coverage, it's going to take 45 days. So this is one of the reasons why I was really annoyed about how they did this, because people didn't know, they're waiting to find out. And you know, folks couldn't make a decision about buying another policy. And now, frankly, it's too late, because I could not in good conscience tell people just to roll the dice, apply for a new policy and hope you get one. And then let's say they're denied coverage and now they've already surrendered their Calpers and they've got health issues. To me, that's just terrible. So this is my recommendations. And then I'm going to do a little commentary here on this, because I've had a lot of people talk to me about, you know, what if it goes broke? I've been reading as much as I can on this, like everybody else, and we don't know. the answer to that, but I'm just going to tell you how I come at these situations is based on my, I am an advocate. I get really worked up over things that I think are injustices or that people have been treated unfairly. And I feel like everybody should keep their CalPERS policies and force their hands, so to speak. It's almost like a game of chicken. What are you going to do? And they're putting this decision back on you. They're saying, don't worry about it. We'll give you your money back. And it's just like, I don't want my money back because I need my long-term care coverage. That's why I did this in the first place. And so it's fine to get your money back, but then now that decision for future long-term care planning has been taken away. And so I don't think they're doing you any favors per se. I think they're putting the burden back on you again, which is totally unfair. And that's my opinion. Again, if I were in your situation, I would keep my long-term care insurance policy with CalPERS. In particular, if I'm in these categories that I've laid out already. And with everybody else in this group, I would wait for them to honor their commitment. That's my opinion. Now, how all of this is going to play out, I don't know. But as I had said in the last program, I can't imagine our legislatures and people that are in authority and in power who have responsibility in this situation would turn their back on people that trusted them. It's just very unfair. And so I do appreciate the fact that some people want to get their refunds back. And I think if they want to do that, that's perfectly fine. But there's lots and lots of people that are not in that category and really can't do that. And so I'm like in solidarity standing with you people saying, yeah, hang in there, keep your policy. And also the issue with premium increases. Remember that the policies were priced very, very low in the first place. And again, as you saw with the types of premiums that people are paying now, those premiums right now still are reasonable, although the rate increases have been a gut punch. But CalPERS is not the only entity. Other insurance companies have done this as well. So you guys are kind of in the same boat with myself and lots of other people. So I have so many questions right now. If you don't mind, I'm going to stop sharing. And let's just start from the top. Okay, I've already addressed that I don't know what's going to happen, and neither do any of you, but I think I've made my point pretty clear. What do I think would be reasonable assets to pay for long-term care? In other words, how much money do I need? When do I know that I'm self-insured? That's a great question. The question is not how much money you have. The question is, where do you want to receive care? And here's why. If you said to me, I want to stay in my home, my children, you know, said that they would support that decision. It's my husband and I, or whatever, I'm single, I want to stay in my home. Understand that right now, for 1 hour, the cost of care from an agency is $37 an hour, and it's going up rapidly. And you can thank COVID for that, the shortage of workers, et cetera, et cetera. Well, is that ever going to change? No. We were just at $32 an hour, $33 an hour, not even a year ago. So the cost of care is going up. It's not going to come back down. So if you're paying $37 to $39, $40 an hour for 4 hours of care, that's $160 a day. That's $5,000 to $6,000 a month, and that's minimal. If you want 24/7 and you are going to be self-funding it in your home, you're looking at $600 to $700 a day. And I'm not exaggerating or trying to scare you. That's how much it is, unless you have a private caregiver that you're having live in with you and you're working that situation out with your family. The other option for 24-hour care is assisted living. And today, that's between $5,000 to $15,000 a month, depending on your acuity and your need. This is very expensive. So you look at that, the cost of what the care is today, and you want to extrapolate a 3 to 4% inflated amount in your age. So if you're in your 70s, you're so young. Are you kidding me? You've got another 20 years, maybe 15, 20 years before you're gonna be looking at needing long-term care. So extrapolate out 3 to 4%, and you get that target number and you say, okay, that's what we're gonna need at this time. Where are we gonna pull this money from? How are we going to do this? So that's the first thing. The second thing is you have to look at who would be injured, if at all, by you having to pay for your own care. If you are a single person and you don't have a spouse to be concerned about financially, do what you want. You can liquidate your assets. You can go into an assisted living, sell your home, use the proceeds to do that. But if you have a spouse and you need long-term care, you get any kind of a dementia or Parkinson's or whatever, how are you going to pay your bills, your regular bills, on top of care for whatever you need? So if you're married, I think it's very risky not to have long-term care insurance. How much do you charge if we want a patient advocate? You can email me, because it looks like this might be a hospice situation. And so you can email me and I will tell you, I do not charge by the hour, I charge a retainer. So the first year, if it's a regular claim, I charge $3,900 for 12 months. If a person stays on claim with us and they want us to continue advocating for them, we reduce the fee the second year. We take 30% off because we, don't have to do some things that we have to do the first time around. So it's just shy of $4,000 a year. If you're on hospice, or if you're only going to be disabled and on claim for 6 months, we do a modified. If you want to talk to me, you want to have a consultation, I charge $150 for a 30-minute consultation. And I do Zoom calls, I do phone calls. You send me your information in advance, whatever insurance policy you have, I'll do a review of it, and I will help you understand what you have and how to use it. Yes, so my brother is filling out forms for our mom's care this week. We could use your help. Please call me. I don't know who this person is. And then the other question is, if you're in your 50s, should you buy long-term care insurance? Yes, 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 and yes, absolutely. It's never going to be less expensive. I just want to give you a little bit of an insight on what's happening in another state with their long-term care, because I think it's going to be coming to California. I believe they're already talking about it in California. And so here's what the state of Washington did to solve this long-term care problem. They have decided to put a tax on payroll for every single person in Washington. And I think it's like 2.9%, if I'm not mistaken. I don't know that that's correct, but somewhere around there. And it was to start after the first of the year. So everybody who is earning a paycheck is going to get that tax. And what do they get for that? They get a policy that's going to pay for a very short amount of time, that's going to pay $3,000 a month for their care with no inflation. If they move out of the state of Washington, they can't take it with them, and they lose all of the money that their payroll taxes paid into the plan. Let's see, what else is terrible about it? It's terrible. Now, it's a good start. It's a good start. But the reason I'm telling you this is because getting our arms around this problem and thinking that California or our federal government is somehow we're going to wake up 3 years from now and this is going to be solved, guess again. States are taking a stab at it, but the stab that they're taking is very small amount of benefits because they know they can't even fund this for people. They know that. And so people in Washington are not wanting to pay that payroll, and they're opting out and they're buying their own long-term care insurance. And these are people that are in their 40s, 30s, 40s. My son, his family lives in Washington. And when I told him about this, he was so annoyed. because he's only 36 years old, or not 36, he's 33. And I said, well, you know, this is the way this is. You're either going to have your own long-term care insurance, or you're going to be paying a tax, and you're not going to be getting very good coverage. So if you're in your 50s, you absolutely should look at long-term care insurance. And it looks like perhaps maybe your husband might be uninsurable. I can chat with you a little bit about that, and we'll see what the problem is. But one, that's important, at least for one spouse, to get something. We're in the process of applying for benefits. When we submit the paperwork, does that count as indicating we want mom to keep her Calpers policy? You have to send this form in now. Filing a claim, the claim issue is a separate issue from the settlement. You have to make this decision now. In fact, you should go on the website today and keep that policy, because if you do not, I believe that you're automatically put into the refund. So just because you filed a claim with Calpers, the people that do the claim with Calpers is a company called LTCG. They are not the settlement. That's a totally separate deal. So if you're in the process of a claim, do not misunderstand and think, oh, we're filing a claim so they know we want us to keep the policy. No, you have to make a decision. You have to deal with the settlement, let them know what you want, and move towards continuing to file a claim. For this person, I'm not sure how to let Calpers know on my mom's behalf the correct way. You should have a letter that you received. If you did not get a letter, probably if you have a power of attorney, I would be happy to get on the phone with Calpers with you. If you have a power of attorney, if you don't have a power of attorney, you can't talk to Calpers for your mom. Somebody's got to get on the phone with Calpers if you did not get that letter, and make sure that she hasn't misplaced it or something. She might not be involved in the settlement. Some people are not part of the settlement. But you get on the phone with Calpers, you find out what category she's in, and then you make that decision immediately. So you've got till the end of the month. Let's see, where can I find out more about a hybrid policy? You can email me, and I'll put my email address up again. And I can tell you, I'll just tell you in general, a hybrid buy-in, you're going to be putting in minimum 50,000 to 150,000 to get a really decent benefit. And I already explained how much I charge. Let's see. Okay, I have Genworth. So this is the first, what do you do? What's the first thing to do if you think care is needed? Call me. Just the fact that you're asking that question is a good reason to make a phone call. Doesn't mean that you're going to need my help, but I will ask you questions about the situation, and it might prompt you to say, oh no, we're still good. I don't think it's time to do this. Or you might say, yeah, I think we need to be looking at filing a claim. The thing to keep in mind, which is very important, when I said early on that people have to cooperate with the process, unfortunately, a lot of times people, you know, the spouse will be calling for the other spouse, and the other spouse is like, no, I don't count me in on this, but yet they really do need the help. So there's ways that we can help you help your spouse to get the good care and to get a claim started if that's a problem. I selected option 3 and sent it to the mail. Do I need to do anything further to keep my Calpers? No, but because you sent it in the mail, the way things are going these days, I would call Calpers and make sure that you're all buttoned up. Calpers in general, they do a great job. They're very overwhelmed, like most people right now, but you should be able to find out that they have your option and that everything is fine. That's why I tell people go online and mail it in. Yes.
I got messed up on the mail-in, I mean the online site.
Yeah.
Where do you have a good number for calling to Calpers?
Yeah. Hold on one moment. Let me, yeah, hold on 1 second. I'm gonna quick pull up my handy dandy little caller log here. and call them. Let's see, what is today? Thursday. Today is a good day to call them. These poor people, oh my gosh, they're just so slammed. I try to be kind unless they start giving me a hard time. All right, so phone number 800-982-1775.
Thank you.
Yeah, in addition, you can go on Calpers LTC, long-term care Calpers online, and there's some links and there's contact information for you to call and whatnot.
Thank you.
You're welcome. So we're almost to the end of our time, and honestly, I didn't think I would take as long. If there's any other questions, Suzanne, I don't know if you have any other way if someone needs to ask directly. I don't have the ability to unmute.
That's fine. I mean, we've given ample opportunity. I really appreciate that you were willing to give the extra time to answer all these questions. You know, you've put up your email. If anyone else wants private assistance, they can reach out to you. I want to thank you so very much, Linda, for the care that you have dedicated to providing all of this information. Really, really great. So yeah, it's up there, the phone number and email address. Thank you.
Did you pop it back up?
Yeah.
Thank you.
Yeah. Oh, sorry.
Oops.
There you go.
Everybody can just do a screenshot of that. And we thank you
Okay.
very, very much, Linda, for giving this excellent presentation today.
You're welcome. Happy New Year, everybody.
All right.
It's going to be a good one.
Yeah, it will. Thank you.
All
Take
right,
care.
take care. Bye-bye.
Bye-bye.
Don't go.